I sold 1,000 shares of SoFi today, but that's not all I did. I will reveal the exact trade just in time for the 29th of January. But first, you need to understand why. You need to understand the bear case, the bull case, the valuation, and then I'll walk you through the exact trade setup step by step so you can understand it and learn. Wait, there's one thing you could do that would actually change your life completely this year, and that is come and join our live trading training, because we could potentially make your money work so hard for you that you're never going to have to work for money again. Wouldn't that be nice? And it's really simple. I break it down for you. It's completely free. It'll take an hour of your life, but you will never be the same again. In a good way, I hope. FelixFriends.org/webinar, and do whatever you want with it. Hopefully make money. And of course, this isn't financial advice, just an old banker talking out of, well, his dog's research. Felix here, and let's get cracking. I'm going to show you on the screen here. Oh God, I already am. What are the 3 bear case items? Number 1. Everyone's saying the tech platform, well, it's just not growing. It's just not really going anywhere. It's a crummy business. Therefore, SoFi isn't really worth anything. Well, this is what Noto said recently. He said the first job of the tech platform is to help us innovate faster than we could otherwise. No one has the same approach, being a one-stop shop on the mobile platform that we have. So having the tech platform allows us to control our own destiny, innovating faster than we could by just using other people's technology. And then it happens to be that other people also want to use this. But that's the priority. So Galileo actually is there to serve SoFi. SoFi isn't really pushing the Galileo thing that fast. Having said that, there are some exciting things coming up. Like, for example, they have a regional bank being onboarded onto the platform. I mean, who knew regional banks would still be around in 2024? Apparently there will be. They weren't all going to be fed to JP Morgan. I'm sure Dylan is terribly sad about that. What's the second one? Well, falling interest rates. So everyone's saying falling interest rates means it's much, much harder for SoFi to attract. Here's the deal for the regional bank. They're saying it's much, much harder for the bank SoFi to attract deposits. And as my dear friend, Data Driven Investing says, great channel, by the way, follow him on Twitter, he's saying it's bollocks. He is saying that, okay, SoFi offers 4.6%, Ally offers less, Lending Club offers more. So you'd think if that was true, if everyone was just like this purely perfect yield chaser, everyone would be putting all their money into Lending Club, right? Do you want to see the chart? There it is in its hideousness. So make sure it fits onto the screen for you here. And what have you got? Well, you've got Lending Club in yellow, and well, it's a bit of a disaster, isn't it? That's Lending Club. I don't know why I didn't use a yellow pen. I want to make it interesting for you. And then where is SoFi? Well, SoFi is the beacon of blue here, and it's the beacon of consistency. Whereas everybody else, Discover and Ally, just completely and massively collapsed after the end of 2022, SoFi just kind of kept growing, slow and steady. And that just is because people actually don't just go to SoFi because they get an extra fraction of a percentage point. They actually go there because they like the product. So it's kind of nonsense. And let's face it, if rates come down, everybody is going to have to cut their API. Therefore, it doesn't really make any difference. So I think it's a load of nonsense that falling rates make it harder to attract deposits. It's just nonsense. And then the third bear case, apparently management over-promises and under-delivers. I'm talking about the Anthony Noto management. Well, let me show you this little bit here. So this is the earnings, or these are the earnings. Use proper grammar, Felix. And you've got 2 things here: earnings per share, profit per share. You've got revenue, how many sales you make and how much cash is coming in. And then you've got these little green numbers here. And every green number means you've beaten expectations every single freaking time. But there was two quarters where they fractionally missed profits per share. What happened in the second and third quarter of 2022? The Joe Biden, El Presidente, came out and said, student loans will be forgiven. And that was the core business of SoFi. And the fact that they still managed to beat on revenue and missed their profits by only 1 cent is kind of insane, really. So I'd say that bear case is a lot of nonsense. So why did you sell your shares? Well, I haven't shown you the full trade, right? That was a but. Remember, there's a second part of the trade. There's a second part of it. I've given away something here. But let's look at it then. Let's look at the bull case. So what's exciting about the bull case? And I'll just run you through it. First, they will announce profitability, real GAAP, Charlie Munger style profitability. None of that Wall Street EBITDA. We just made it up type profitability on the 29th of January. Put it in your diaries. Write it on your hand, maybe your forehead. Post-it notes, alarms, all that kind of stuff. 29th of January is going to be the day that changes everything. That'd make a good title, wouldn't it? Should we use that as a title? And then number two is, well, because of higher deposits, because all of that money being sucked in, because it's just a good product, they actually are going to be able to lend out more than last year, about $2 to $4 billion more, which is a lot, because the way banks work is they get your deposits money, they put it in the account, they pretend that they're holding it there and it's very safe, but actually they're lending it out and they're making money off it. That's the way it works. And then number three, we're going to get at least 3 rate cuts this year. Maybe it'll be 5 or 6 if you believe some of the nutters out there. But what does that mean? Well, 3 rate cuts, so 0.75% of interest rate cuts. It could be more, could be a percent, could be more. Say it's a percentage point, make the maths easy. That would make SoFi's inherent value 10% higher. How does that work? Well, the way companies like SoFi are valued is we always look at, well, what's the alternative? What's the zero risk alternative? Well, the zero risk alternative is buying Papa Biden's bonds. Exactly. And he's printing lots of those. So you can get government bonds, but if the interest rate on government bonds go down a percentage point, stocks become more appealing. So it's about a 1 to 10 ratio. So a 1% cut in interest rates should make a stock like SoFi about 10% more valuable. Now, we can argue about whether this is priced in or not, but regardless, it is a good thing. Number 4, who said bankers can count? Ex-bankers even. The small business loans marketplace. This is a brilliant, shiny, fancy new product that SoFi has just come out with. And what does it mean? What does it do? You can just go onto the website and you can say, I'm a small business. Here are my numbers. And they're going to match you up with lenders, whether you're a startup or an existing business. And they're obviously going to take a cut. It's like a mortgage broker, but for loans. Brilliant. I love it. Intuit has something similar. Because we use, for one of our American businesses, we use their accounting software, and you can literally click on a button and you can get a loan. And of course, they're going to make money out of that. So I love that. I think that's a great thing. And I'm sure they'll be launching more products as well. And then we're going to get better margins and potentially, wait for it, the excitement that all shareholders want, buybacks. Yes, the double B. Because they're making money and they've got free cash flow and they won't know what to do with it, because I think it's fairly unlikely they're going to go out and buy loads of stuff because it doesn't really make sense. They've got everything they need. Margins, EBITDA margins, the making Charlie Munger turn in his grave kind of type margins. We're expecting those to go above 30%. What does that mean? It means the company is going to be worth more. And in addition, we're expecting about 1 million members growth per quarter into 2025. So I think the future looks bright and rosy. So Felix, why the heck did you sell something? Well, let me walk you through the trade and then I give you my price target. So I'm going to pull the trade up for you. There it is. There she is in all her glory. So what does the trade look like? Okay, let me very briefly explain this. And this is a website that we are building called optionswatch.io. And first of all, what's my break even? So my break even is never today's share price because I'm an options trader and therefore we have better setups. Very simple. So the yellow line here is my break even. And you might be thinking, how does that work? How do you, what? How can you be below the share price? Well, my break even is $6.70. Yeah. Break even. And that is a whopping 10% below the current market. So I'm already feeling a little bit more warm and fuzzy inside because I'm safer. So what I've done is twofold. I have sold, well, start with the other one. I have bought a $6 put on SoFi. You might be thinking, Felix, you're bearish, right? So that's my essentially selling 1,000 shares. But then the second thing I've done is I've sold the $7 put, which controls my another 1,000 shares. So actually what I've sold is really just a piece of insurance. Think of it like car insurance. If you hit a tree really, really hard and your car is no longer worth anything at all, you're not going to lose all your money. It's going to be, well, you're still going to have to pay a little bit, right? Some sort of percentage, but the insurer is going to bear the brunt of it. And that's the same idea here, that we hedge, we limit our risk. So what's our risk? Well, for me, it's about $700. So I did 10 of these. And my profit is potentially 43%. And what do I need the stock to do? Does it need to massively go up and explode? And no, it could actually go sideways. It could go up, or it could go down minus 10%. So I've got 3 alternatives: up, sideways, down, and I'm making money in each direction. Isn't that nice? Do I ever lose money? Yeah, potentially. If it like cataclysmically tanks to somewhere down here, then Felix will be sad. Less cucumbers for Winston that day. That's the trade setup. So I put a link to this down below. You can check it out. There's also a free trial to optionswatch.io. And if this kind of setup where you can be wrong and make money intrigues you, do one thing, please. Join me on Tuesday live for live trading training where I'll walk you through this. And there should be a banner up here somewhere, and I'm sure there's a link down below somewhere where you can just go to felixfriends.org/webinar, felixfriends.org/webinar, and click on it and grab yourself one of the seats available. How about valuations then? Well, when I run my numbers on my discounted cash flow models, I get to about a $15 plus valuation. That's kind of my target with this. And at that point, I would probably take profits and exit and go find something else, honestly, because I'm a trader. Now, if the company gets way, way better and they keep improving margins and they keep growing, then I might possibly add this to my long-term portfolio. But for the moment, for me, this is a trading position because it's just so volatile. And with something as volatile as this, I can make more money trading it than actually owning it for the long term. So that's my approach to it. If you want to see exactly what stocks I own, I put a video out on that as well. You can check it out. It's got a link to my full stock portfolio, all the data points, all the reasoning why I own them and everything else. So check it out. There's a link here somewhere. And if you enjoy this channel, you know what to do. Smash and share and like and comment and, do all the wonderful things that you can do around this piece of, information. I thank you for watching. And if you're only going to do one of those things and you're still here, you're still thinking, why is he still talking? Then sign up for the live trading training, because that's the one thing that could actually change your life this year. I mean, seriously change your life. Come and join us. felixfriends.org/webinar.